Hey everyone, and welcome back for another deep dive.
All right.
Today, we're going to be taking a look at Salesforce's recent Form 10Q,
Yeah.
the one for the quarter ending October 31st, 2024.
That was good.
So this is, for anyone who's followed the show for a while and follows Salesforce, knows that these 10Qs are always a really fascinating look into the company.
Yeah.
Really kind of get a glimpse behind the curtain.
Absolutely.
But I think this one is particularly interesting.
Why is that?
Well, for a few reasons, but I think, one of the things that really jumps out at me right away
Yeah.
is this idea that Salesforce is really pushing beyond just being a CRM company.
Right.
They're really kind of positioning themselves as like this, AI-powered platform
Yeah,
for
absolutely.
the enterprise.
Yeah, and you see that throughout the 10Q, this idea that they're really trying to create this ecosystem
Right.
where humans and AI are working together seamlessly.
Yeah.
And it's not just in sales and service, which is, traditionally where you think of CRM. It's
Right.
across marketing. It's across IT. Across all these different functions of a business.
It's like they're building the operating system
Yeah,
for the AI-powered enterprise.
I think that's a great way to put it.
And speaking of AI,
Yeah.
I mean, their new Agentforce platform,
Right.
which they announced during this quarter,
Yeah.
seems like a total game changer.
Absolutely. There's a huge bet on the power of AI.
Yeah, I mean, AI agents that can actually make decisions and take action
Mm-hmm.
without human intervention.
Yeah.
That's, talk about a productivity boost.
It's a potential productivity boost for sure.
Right.
But it's more than just automation.
Right.
It's really this idea that AI is going to be deeply embedded in every business process.
Mhm.
And it's going to help companies not only work more efficiently,
Right.
but so make smarter decisions.
Which is fascinating to me because on the one hand, you have this, very futuristic vision.
Yeah.
But on the other hand, they're also dealing with some very real present-day challenges.
Oh, absolutely.
I mean, the global economy is,
Yeah.
to put it mildly, a bit of a roller coaster right now.
Yeah, no doubt about it. And the 10Q definitely doesn't shy away from that.
Right.
They acknowledge the potential impact of things like volatile market conditions, currency fluctuations, all of those factors that are,
Right.
creating uncertainty in the global economy.
Yeah, it's a reminder that even a tech giant like Salesforce
Yeah.
isn't immune to those forces.
Right, exactly. They're not operating in a vacuum.
No.
They're part of this larger global ecosystem.
Right. And yet, despite all of that,
Yeah.
they still managed to pull off a pretty strong financial performance this quarter.
They did.
I mean, a 16% jump in net income year over year.
It's impressive.
It's pretty impressive.
Yeah.
It tells me that their strategy of balancing growth with efficiency is actually working.
Yeah, I think that's a key takeaway here.
Yeah.
That they're able to walk that tightrope between investing for the future and also, keeping a close eye on their spending.
Right. And that financial strength gives them a lot of flexibility,
Absolutely.
to invest in these AI ambitions
Mm-hmm.
while also, navigating these economic headwinds.
Yeah, it's like they're building a high-tech sailboat
Okay. I like that.
that can weather any storm.
The sailboat analogy.
Right.
I like it.
So they've got the sails set for the future,
Right.
but they've also got, a sturdy hull that can withstand some rough seas.
Yeah. And they're going to need that sturdy hull.
Yeah.
Because, let's not forget, a big part of their success hinges on keeping their existing customers happy.
Right.
We're talking about a company that generates something like 94%
Yeah.
of its revenue from subscriptions.
It's a subscription-based business model.
That's a lot of pressure
Yeah.
to keep those customers coming back for more.
It is, and that's why I think it's so interesting that the filing really highlights
Yeah.
their focus on customer programs
Yeah.
and their strategies for driving adoption,
Right.
especially among those big enterprise clients.
Yeah. Right. Because it's one thing to, get a bunch of small businesses signed up for your service.
Right.
It's another thing entirely to land those big enterprise deals.
Absolutely. And those enterprise deals are where they're really focusing their energy.
Right.
And it makes sense because those are the customers that have
Right.
the potential to really generate significant revenue over the long term.
Right. It's like they're building a subscription service for businesses, but instead of binge watching shows, binge optimizing their sales funnels
Exactly.
and their customer support workflows.
Yeah, and they're constantly, rolling out new features, new integrations
Right. Yeah.
to keep those customers engaged.
Yeah, but hold on a second.
Yeah,
Didn't they also make some pretty big acquisitions recently?
they did. They've been on a bit of an acquisition spree.
Yeah, and doesn't that add like a whole other layer of complexity
They does.
to their financial picture?
Yeah, because those acquisitions
Right.
come with a lot of baggage, so to speak.
Right. And by baggage, I mean intangible assets, right?
Yes, exactly.
Yeah.
And that's where things get really interesting on the balance sheet.
Yeah.
Because all those acquisitions have resulted in a massive amount of intangible assets for Salesforce.
Right.
Things like developed technology, customer relationships. We're talking about $11.7 billion worth of intangible assets.
That's a lot.
Now, that might sound like a great thing,
Right.
but it's not as simple as having, a pile of cash sitting in the bank.
Right, because you can't just spend those intangible assets
Right.
like you can spend cash.
Exactly. You have to manage them carefully,
Right.
and you have to amortize them over time,
Right, which basically means...
which basically means you're spreading the cost of those assets over their useful life.
Yeah, and that can affect your profitability.
It does.
Right.
So it's a factor that you have to take into account when you're analyzing their financial performance.
Okay, so we've got this company that's pushing the boundaries of AI, navigating a turbulent global economy. Yeah.
And managing this mountain of intangible assets,
It's a lot to juggle.
is there anything else they need to worry about?
Well, there's one more piece of the puzzle we need to factor in,
Okay.
and that's the legal and regulatory landscape.
Right, because in a world that's increasingly obsessed with data privacy and AI ethics,
Yeah,
that landscape is changing faster than ever.
absolutely. And for a company like Salesforce, whose entire business revolves around
Right.
collecting, analyzing, using data,
Right.
they're basically operating in the eye of the data privacy hurricane.
Yeah, they have to be incredibly careful about how they handle all that data, especially with all these increasingly stringent privacy laws like the CCPA in California and the GDPR in Europe.
Right, those are two of the big ones.
Yeah, and one misstep could lead to hefty fines,
Absolutely.
lawsuits, a PR nightmare.
Yeah, reputational damage is a big concern these days.
Not to mention the whole wild west of AI regulation that's emerging.
Right. I mean, we're just starting to grapple with the ethical implications of AI decision-making.
Yeah.
And those implications are going to be amplified
Mm-hmm.
when you're talking about AI agents operating at the scale that Salesforce is envisioning.
Absolutely. And I think Salesforce is aware of that.
Yeah.
The 10Q highlights their efforts to monitor and adapt to this evolving regulatory landscape.
Right.
And that's crucial for maintaining customer trust and avoiding those potential legal landmines.
So let's pause here for a moment and take a breath.
Okay.
I know we've covered a lot of ground,
We have.
but I think it's important for our listeners to understand that this isn't just about numbers on a spreadsheet.
Right.
This is about a company that's trying to chart a course through uncharted territory, pushing the limits of technology while grappling with these ethical dilemmas
Right.
and navigating a world that's changing faster than ever before.
It's a fascinating story.
It is. And before we dive deeper into the specifics of their financial performance and their strategies,
Yeah.
I want to pose a question to our listeners.
Okay.
Knowing what we know now about Salesforce's ambitions and the challenges they face, what do you think? Are they setting themselves up for spectacular success or a spectacular stumble?
That's the million-dollar question.
It is. And to get closer to an answer, we
Yeah.
need to unpack some more of these juicy financial details.
All right, let's do it.
We'll be back in a flash to dig into those numbers and see what else we can uncover.
Sounds good.
Welcome back.
All right, so we've set the stage. We've talked about their big AI ambitions.
Yeah.
The, kind of economic tightrope they're walking.
Right.
The legal hurdles they're jumping over. But now
Yeah.
it's time to, really get down to brass tacks
Let's do it.
and look at the actual numbers.
Yeah.
Because at the end of the day, financial performance is the report card.
It is.
That tells us how well they're actually executing
Exactly.
on this vision.
And this report card is looking pretty good.
Yeah.
I mean, a net income of $1.527 billion for the quarter. It's not bad.
That's a 16% increase year over year,
Yeah.
even with all the challenges that we've discussed.
Yeah, I was pretty impressed by that.
Yeah.
It's like they're saying, hey, economic headwinds,
Right.
we're just going to tack right through them.
Yeah, they're finding a way to navigate those choppy waters.
But what about their cash flow?
Yeah.
Is that as healthy as their net income suggests?
Even better.
Okay.
Their cash flow from operations is up a whopping 34% to $9.1 billion.
Wow.
And they're sitting on a nice cushion of $12.8 billion
Yeah.
in cash equivalents and marketable securities.
But they've got a war chest.
They've got a war chest.
They're ready to, weather any financial storms that may come their way.
Exactly. They've got options.
Yeah. But, remember we talked about how the vast majority of their revenue, like 94%, comes from subscriptions?
It's a subscription-based business.
So how's that subscription model holding up?
Yeah.
Are they managing to keep those customers hooked?
Well, one of the things that jumped out at me in the filing was
Yeah.
how they break down their revenue recognition.
Okay.
So remember, 94% of their total revenue is from subscriptions.
Right.
But within that, they distinguish between revenue recognized over time,
Okay.
mostly from cloud service subscriptions, and revenue recognized at a point in time,
Okay.
mainly from term software licenses.
So for our listener who might not be familiar with the nuances of accounting jargon,
Right.
what's the difference?
Yeah. So think of it this way.
Okay.
The cloud service subscriptions are like your Netflix subscription.
Okay.
You pay a monthly fee,
Right.
and Salesforce recognizes that revenue gradually
Okay.
over the length of your subscription.
Got it.
But those term software licenses are more like buying a software package up front.
Okay.
So Salesforce gets a chunk of revenue all at once.
Okay. So it's like a sign-on bonus
It's like a sign-on bonus.
for landing those big enterprise customers.
Exactly.
Okay.
'Cause it's a different way of recognizing the revenue.
So what's the split between those two types of revenue?
Yeah, so for the quarter ending October 31, 2024, term software licenses only made up about 5%
Okay.
of their subscription and support revenue.
All right.
For the 9 months ending on that date, it was around 6%.
Okay. So it's not a huge chunk.
It's not a huge chunk.
It's definitely a factor.
It's a factor, especially when you consider their focus on winning those large enterprise deals.
Right.
So it's like adding a little rocket boost
Yeah.
to their recurring revenue stream.
But let's talk about the flip side of that subscription coin.
Okay.
Customer churn.
Right.
They did mention an attrition rate of around 8%, excluding Slack.
Yeah.
How concerned should we be about that number?
It's definitely something to keep an eye on.
Okay.
I don't think it's necessarily a red flag.
Okay.
Remember, they're operating in a competitive market.
Right.
And 8% churn is actually pretty in line with industry averages.
Okay.
Plus, the filing highlights their efforts to combat churn through customer programs
Yeah.
and those enterprise adoption strategies we talked about earlier.
Yeah.
So they're working hard to make sure their customers are getting the most out of their Salesforce experience.
Yeah. It's like they're constantly rolling out new features,
Yeah.
integrations, training resources to keep those customers engaged
Right.
and coming back for more.
It's all about building that loyal fan base.
Right. They're not just sitting back and collecting those subscription checks.
Exactly.
They're actively nurturing
It's a relationship business.
those relationships.
Yeah.
But let's be honest, acquiring new customers can be expensive,
It can be very expensive.
especially when you're chasing after those big enterprise accounts.
Absolutely. And the filing acknowledges that winning those big deals often requires a more sophisticated
Right.
and therefore more expensive approach.
Right. It's got to wine and dine them.
You get wine and dine them.
Take them to fancy dinners.
Exactly.
Fly them out to conferences.
It's all part of the game.
So it's a balancing act,
It is.
right? Trying to reel in those big fish
Yeah.
while also keeping a close eye on costs, making sure they're getting a good return
It's a delicate balance.
on their investment.
For sure.
Speaking of investments, let's shift gears for a moment and talk about
Okay.
those intangible assets we touched on earlier.
Right. Those $11.7 billion.
How are they managing that behemoth on their balance sheet?
Yeah, because those aren't just numbers on a page.
Right.
They represent real value,
Right.
but they also come with certain financial implications.
Right. And like we talked about before, they have to be amortized over time,
Exactly.
which can impact the profitability.
It does.
So for the 3 months ended October 31st, 2024, their amortization of intangible assets was $354 million.
Okay.
That's actually down from $468 million
Interesting.
for the same period in 2023.
Okay.
And for the 9 months ended October 34, 2024, it was $1.3 billion compared to $1.4 billion in the prior year.
So their amortization expenses are actually going down, even though they've been making these big acquisitions.
Which seems like a good sign, right?
It is. It suggests that they're managing those intangible assets effectively
Okay.
and making sure that they're contributing to their bottom line.
All right, but it's something we'll want to keep an eye on
Absolutely.
as they continue to grow through acquisitions.
Yeah, because, as they acquire more companies,
Right.
that number could start to creep up again.
So they're managing those intangible assets.
Yeah.
They're generating strong cash flow. Their net income is climbing.
They're firing on all cylinders.
All good things. But no company is an island,
Right.
especially in today's interconnected world.
Exactly.
What about their investment portfolio?
Yeah.
Are they, dabbling in risky ventures, or are they playing it safe with their cash?
Well, they reported $5.782 billion in marketable securities
Okay.
as of October 34, 2024. And the bulk of that was in corporate notes and obligations,
Okay.
followed by U.S. Treasury securities.
So they're not exactly chasing after meme stocks
No, they're not playing in the meme stock casino.
or putting all their eggs in one basket.
They're diversifying, but they're diversifying with a focus on stability.
Right. Which makes sense given, their commitment to, maintaining that financial stability, weathering those economic uncertainties.
Exactly. They're not looking to gamble with their future.
Okay. And they classified their debt securities as available for sale.
Right.
Which basically means that gains or losses aren't recognized in their income statement.
Unless they sell the securities.
Right.
Or experience expected credit losses.
So they're playing it smart.
They're being prudent.
Being fiscally responsible with their cash reserves.
Yes.
But speaking of responsible, let's talk about their debt.
Okay.
They do have some debt on their books, right?
They do, like most companies.
Are they racking up massive loans to fuel their growth?
Yeah.
Or are they keeping their borrowing in check?
Well, their filing provides some details about their outstanding debt obligations.
Okay, so what kind of debt are we talking about? Are they issuing bonds?
The majority of their debt comes from senior notes.
Okay.
With various maturity dates ranging from 2026 to 2032.
And what about the interest rates on those notes?
Yeah, the interest rates vary
Okay.
depending on when the debt was issued.
Okay.
So they have some senior notes with a 2.875% interest rate,
Okay.
while others have rates as high as 5.25%.
Oh, it's a mix.
It's a mix, which reflects the fact that interest rates have been fluctuating
Right.
quite a bit in recent years.
Makes perfect sense.
So it's like they're refinancing their mortgage
Yeah.
as interest rates go up and down.
But what are they actually using these borrowed funds for?
Yeah, so the filing states that the proceeds from their debt issuances may be used for general corporate purposes,
Okay.
which could include things like acquisitions, investments, working capital,
Okay.
or even stock repurchases.
So it gives them flexibility.
It gives them flexibility.
They can use those funds to seize opportunities as they arise.
Exactly.
Whether that's investing in a promising startup, buying back their own stock, shoring up their cash reserves.
It's like having a line of credit
Right.
that they can tap into when needed.
But let's not forget that every financial decision
Right.
comes with risks.
Absolutely.
And debt is no exception.
Debt is definitely a double-edged sword.
Too much debt can put a strain
It can.
on a company's finances, limit their future options.
Exactly. So it's all about finding that right balance.
Which is why it's so important to look at their debt levels
Yeah.
in relation to their overall financial health.
Right.
Are they taking on more debt than they can comfortably handle?
Exactly.
Or are they managing it responsibly?
That's the key question.
And that's something we'll want to keep an eye on as we continue our deep dive.
Absolutely. We'll be watching those debt levels closely.
But speaking of things we need to keep an eye on, remember those legal and regulatory challenges
Oh, yeah.
touched on earlier?
Those are always lurking in the background.
Well, the 10Q actually gives us some specific insights into the risks they're facing in this arena.
Right.
And it's not just theoretical stuff. These
Right.
are real challenges that could have a significant impact on their business.
So let's get real about the legal landscape.
Let's get down to the nitty-gritty.
What are some of the specific challenges they're highlighting?
Well, unsurprisingly, one of their biggest concerns is data privacy.
Makes sense.
They acknowledge the growing web of privacy laws and regulations globally,
Yeah, it's a complex landscape.
and how those rules are constantly evolving.
It's like trying to hit a moving target.
Which makes sense given that their entire business is
Right.
built around collecting and analyzing data.
Data is their lifeblood.
They're basically swimming in a sea of data,
They are.
and the legal currents are getting stronger.
Yeah, the tide is definitely turning towards more privacy regulation.
And they highlight the potential for legal challenges,
Yeah.
fines, reputational damage if they fail to comply with these evolving rules.
Yeah, the stakes are high.
They specifically mentioned the CCPA in California,
Right.
the GDPR in Europe.
Two of the toughest privacy laws out there.
It's like they're trying to navigate a minefield
It is a minefield.
of regulations,
Yeah.
and one wrong step could set off an explosion of legal trouble.
You could say that again.
but they're definitely taking it seriously.
Yeah, it seems like they are.
They talk about their efforts to monitor and adapt to this changing landscape,
Right.
which is crucial for maintaining customer trust.
Absolutely.
They know if people lose faith in their ability to protect their data,
Mm-hmm.
it could damage their brand,
Yeah.
hurt their bottom line.
Trust is everything in this business.
So it's not just about ticking the boxes for compliance.
Right.
It's about building a culture of data responsibility,
It's about walking the walk,
transparency.
not just talking the talk.
They have to show their customers
Yeah.
that they're taking data privacy seriously
Actions speak louder than words.
and that they're committed to being good stewards of that data.
Right. It's about being a responsible data citizen.
And it's not just about existing regulations. They're also looking ahead to potential future developments.
Right, because the landscape is constantly changing.
For instance, they mention the possibility of increased restrictions on cross-border data transfers,
Yeah, that's a big one.
which could have significant implications
Huge implications,
for their international operations.
especially for a global company like Salesforce.
So it's like they're playing a game of regulatory chess,
It is a strategic game.
trying to anticipate their opponent's next move
Right.
and plan their strategy accordingly.
They've got to stay one step ahead.
But data privacy isn't the only legal challenge they're facing, right?
Right. What else is on their radar?
What other potential landmines
Yeah.
are they navigating?
So they also touch on intellectual property concerns.
Ah, okay.
They acknowledge the risk of lawsuits from third parties,
Okay.
claiming infringement of patents or other proprietary rights.
Which is a concern for any tech company that's innovating at a rapid pace.
Absolutely. The more you innovate,
Right.
the more likely you are to bump up against someone else's intellectual property.
It's inevitable.
It's almost unavoidable.
And they're clearly aware of the risks.
Yeah.
They emphasize the importance of protecting their intellectual property
Right.
through patents, trademarks, and other legal mechanisms.
They're building a legal fortress.
So it's like they're playing defense and offense at the same time,
Exact.
trying to protect their own intellectual property while also making sure they're not stepping on anyone else's toes.
It's a delicate dance.
And, of course, we can't forget about the legal complexities surrounding AI,
Right. That's a whole other can of worms.
which we've already discussed.
Yeah. AI is a whole new frontier.
That's a whole other layer of legal uncertainty
And the rules are still being written.
they're grappling with.
Yeah, it's uncharted territory.
It's like they're exploring this vast, uncharted territory. And they're not even sure what kind of legal creatures might be lurking in the shadows.
There are definitely some unknown unknowns out there.
Okay, so we've covered a lot of ground here.
We have.
From their financial performance to their legal challenges.
It's been a whirlwind tour.
But I think it's important to step back for a moment
Okay.
and consider the bigger picture.
The big picture.
What does all of this tell us about Salesforce's position in the tech world,
Yeah.
the trends they're shaping?
That's the real question.
So let's put on our futurist hats for a moment.
All right, let's gaze into the crystal ball.
What kind of signals are we getting from this 10Q about the direction Salesforce is heading, the impact they're having on the broader tech landscape?
It's an exciting time to be watching this company.
Okay, so we've crunched the numbers, we've, peeked behind the legal curtain.
Right.
But now I think it's time to step back
Yeah.
and ask the big question.
The big one.
Where does Salesforce fit into the grand scheme of the tech universe?
Right. Where are they headed?
What kind of future are they building?
Yeah.
Not just for themselves, but for all of us.
It's a fascinating question. And I think this 10Q gives us some clues.
Yeah.
They're not just reacting to trends.
Right.
They're actively shaping them.
Right.
This isn't just a CRM company anymore.
Right.
It's a company that's building the infrastructure for an AI-powered world.
It's like they're laying down the railroad tracks for the AI Express.
I like that analogy.
Yeah.
They're building the tracks and they're betting big
Right.
that businesses will be lining up to hop on board.
But if we take a closer look at their strategy,
Yeah.
it's clear that they're not just targeting any business.
All right. They're going after the big game.
Right.
The enterprise giants.
The whales.
The whales who have complex needs and deep pockets.
And their focus on customer programs and adoption strategies is all about creating that sticky web
Right.
that keeps those enterprise clients hooked on the Salesforce ecosystem.
It's all about creating that ecosystem.
Yeah, right. It's like they're building a luxury hotel for businesses.
Yeah.
But instead of offering, fluffy pillows and room service,
Right.
they're offering AI-powered insights, streamlined workflows, a seamless digital experience.
It's the all-inclusive resort for the modern enterprise.
And once those big companies check in,
Yeah,
they're not likely to check out anytime soon.
exactly. They're there to stay.
And those strategic acquisitions they've been making
Mm-hmm.
play a key role in this strategy.
Absolutely.
They're not just acquiring companies, they're acquiring capabilities.
They're filling in the gaps in their portfolio
Right.
to become that one-stop shop
Right.
for businesses looking to transform themselves for the digital age.
It's like they're playing a game of tech monopoly.
Yeah.
Strategically buying up properties to create this unstoppable empire.
Right, but instead of Boardwalk and Park Place,
Right.
they're acquiring companies like Slack and Tableau,
Right.
giving them this dominant position in everything from communication to data visualization.
And let's not forget about the crown jewel of their strategy, AI.
AI is the wild card.
Right. If their Agentforce platform and those other AI initiatives really take off, it could fundamentally change the way businesses operate.
It could be a game changer.
Right. We could see a world where AI is handling everything,
Yeah.
from customer service interactions
Right.
to complex data analysis,
Automating all those tasks?
freeing up humans to focus
Right.
on more strategic tasks.
That's the promise of AI.
It's like they're creating an army of digital assistants,
Yeah.
ready to tackle those mundane tasks that suck up so much of our time.
Right, freeing up humans to be more human.
But that also raises some really interesting questions, doesn't it?
It does.
I mean, what happens to the workforce as
Yeah.
AI agents become more capable?
Right.
Do we all just sit back and let the robots do our jobs?
That's the big question.
It is a big question.
And it's one that society as a whole is going to have to grapple with.
But one thing's for sure, the jobs of the future will look very different
It will.
from the jobs of today.
Absolutely.
And companies like Salesforce are at the forefront
Yeah.
of that shift.
They're leading the charge.
They're not just creating new technologies, they're
Right.
creating new possibilities, new ways of working, and new challenges
It's a whole new world.
that we'll need to address.
And we're all along for the ride.
It's like they're pioneers exploring a new frontier,
Yeah.
and we're all along for the ride.
We are.
But even the most intrepid explorers face dangers along the way.
Oh, absolutely.
And Salesforce is no exception. I mean, we've talked about the competitive landscape, the legal challenges,
Right.
but there's also the issue of public perception,
That's a big one.
right? How do they balance their ambition with their responsibility to society as a whole?
Yeah, because they're sitting on a mountain of data,
Right,
and they need to be very transparent about how they're using that data,
right.
the steps they're taking to protect people's privacy.
Because if they lose the public's trust, it could undermine their entire business model.
Trust is fragile.
It's like they're holding this precious gem,
Yeah.
but that gem is also fragile.
Right.
They need to handle it with care, making
Yeah.
sure they're not exploiting it
Mhm.
for their own gain, but using it to create a better future for everyone.
It's a balancing act.
And that's a challenge that goes beyond Salesforce,
It does.
isn't it?
It's a challenge for all of us.
Right. It's a challenge for all of us.
As we navigate this,
This rapidly evolving
Yeah.
technological landscape.
it's a brave new world.
So as we wrap up this deep dive,
Yeah.
I want to leave our listeners with a sense of both excitement and cautious optimism.
I like that.
We're living in a time of unprecedented technological advancement,
We are.
and companies like Salesforce are at the forefront of that change.
They're pushing the boundaries.
But it's important to remember that technology is a tool,
It is a tool.
and like any tool, it can be used for good or for ill.
Right. It all depends on how we use it.
It's up to all of us to make sure that technology is used responsibly,
Responsibly.
ethically, and in a way that benefits humanity as a whole.
That's the goal.
And that's a conversation we need to keep having
We do.
as individuals, as businesses, and as a society.
It's an ongoing dialogue.
So as always, we encourage our listeners to join that conversation.
Yeah. Share your thoughts.
Share your thoughts, your insights, your concerns.
Engage with us.
Because the future isn't something that just happens to us.
Right.
It's something we create together.
We're all in this together.
Well said. And on that note,
Yeah.
until next time,
Until next time.
keep exploring, keep questioning,
Keep learning.
and keep diving deep.
We'll see you out there